You are listening to chartingwealth.com for Tuesday, the 30th of June, 2015. It's great to have you with us. We are reviewing the charts as we do every single day the markets are open. And as you can see, we start, as always, with IYY. We start on our 2-day chart. And you can see over here the massive moves down that we have had starting on the 25th, that candle, and then, of course, after the weekend on the 29th, we see massive down moves. In fact, about double the move the market ended up down. We have a very long wick on the bottom going way through the Bollinger Bands and then pushed back up by the bulls, but a lot of push down by the bears. A huge acceleration in our derivative oscillator going down, and a great divergence taking place between the moving average convergence divergence line and the signal line. We can see even more if we switch over to the 4-hour chart. We can see how we have our 2-day trend line that we drew starting back on the 26th going on through today, and you can see massive drops off throughout the morning and the afternoon of Monday the 29th. And we've got a market in serious down moves. Of course, stuff happening overseas with Greece, and of course the American economy. Even though you hear things about it, I think we sort of all know where the American economy actually is, despite what you hear on the news. What drives the market up? The forecast of more free money to the banks, not that the economy is doing stellar. So let's go ahead and go back out to the 2-day chart, and let's switch over to, and again, the total market was down 2.505% today. When we go over to SPY, the Standard & Poor's 500, as depicted in the ETF SPY, we see something that looks very much akin to the total market. Again, these are the 500 big companies, and we, of course, continue to have a significant down move in the market today. Derivative oscillator heating up just like we saw in the total market, and a huge divergence taking place between the signal line and the MACD, the moving average convergence divergence. Of course, we told you that this was already a market in serious down move. We look at the 4-hour chart, looks very similar. We have a push through the Bollinger Band actually on the SPY as opposed to the IYY. Serious move down on that. Huge move down on the derivative oscillator, and even a greater diverging. So we've got a market in serious down move mode on the SPY, and like I said, a 2.1% down move on the day. This day, and then over the last 2 days, even more. Now we're going to go back to the 2-day chart, and we're going to look at the Qs. Qs was actually down 2.36% of the 3 indexes. It was down the most. Again, great diverging of the MACD, big down move in the derivative oscillator, and a huge down move in the market, in the Qs. That's the NASDAQ 100. About double the move down on that long wick and pushed back up by the bulls. A huge push down by the bears. And when we go over to the 4-hour chart, we see again another move pushing through the Bollinger Band with lots of volatility being seen there, way below our 2-day trend line. And of course, we talked about these moves as we saw them being set up several days ago. Hopefully, if you were going to play the down move, you were doing that in an inverse fund such as QID, which is a fund that tracks the inverse of the Qs, so it goes up when the Qs go down, or if you were in the Qs, you got out, you're going to let it go down and buy it back cheaper. A lot of different ways to play these things. Now, lastly, let's go back to the 2-day chart, and we're going to look at gold, which was up today, 0.45%. However, if you look at our 2-day chart, we have a trend line that we have drawn, and we are still in an official down move on the 2-day chart. We have a divergence taking place. The On the MACD and the signal line on the 2-day chart, it is still in an official down move. If we revert to the 4-hour, the half-day chart, we can see that it has not yet crossed. It may be crossing tomorrow going up, still below the 2-day trend line. We do see the last 3 candles on the half-day chart, so that would represent a day and a half, are green candles. Not crossed yet. Derivative oscillator is still negative, but it may very well be moving to an up move. But again, we don't go by the smaller chart, do we? We go by the bigger chart. That may be changing, but it hasn't changed yet. And we are currently in a down move still on gold. That is where everything has wrapped up for the end of the day on Monday, going into Tuesday, the 30th of June. Hope that the markets are treating you well and you are following the charts and not the noise. And remember, please be sure to friend us on Facebook, follow us on Twitter, and hopefully you're already subscribing to chartingwealth.com's daily email, where we send you our daily updates along with our weekly review and forecast. Thank you so much for listening. God bless. Wish you the best in trading from chartingwealth.com.